All right. Good morning. How are y'all doing? Welcome to the Chronicles. I am Chronicle Mac. I'm here with Alonzo Hall from ADH Wealth Solutions. Um, he's here to talk to us about a little bit how he got into the field he's in, and I'm just going to be here listening. I have nothing else. I don't have to chime in on anything because you know what, y'all not here to see me. Y'all not here to look at this beautiful chocolate skin of a brother. You ain't looking at me. You're looking at the toffee brother. All right. How you doing, bro?
I'm doing well. Number one, thank you for having me on your platform. Hello to all of the followers out there in the social media verse. Hopefully, you guys will gain something from at least this episode with the Chronicles. And, you know, I've gained something from watching a few other episodes, even just in, you know, learning more about myself.
All right. All right. All right. All right. Hey, so when we first started talking, you told me about how you got shot. I think you said you got shot 5 times. Um,
Correct.
how
So I can kind of reiterate because the last time we talked, I don't think that really got that footage got released. So I'll kind of rewind it for you. 2008, 3 days before Mother's Day, I was living in Winston-Salem, North Carolina, and I got shot 5 times through my shoulder, clipped my ear, grazed my head, through my back, and grazed my left elbow. Um, I ended up basically dying in the back seat of my brother's Jeep on the way to the hospital. What ended up happening was we didn't know where the hospital was because we weren't from North Carolina. We weren't from that city. So we were just driving the streets, and luckily, because we were speeding, a cop pulled us over. When that cop pulled my brother over, he was like, "Why the hell are you speeding? This, that, and the third." And then my brother was like, "Look, officer, I'm freaked out. My brother is dying in the back seat." From which we got the police to, they didn't escort us. They removed me from my brother's car, which was where I was laying on the floor on the ground. And apparently, I actually called one of my family members and told them I was shot, and he thought I was joking. And then I ended up in the hospital from the ambulance. At which point, if anybody who's been through that scenario understands, usually, you know, they cut all of your clothes because they don't know where the entrance or exit wound is, so they just want you absolutely nude so they can see where the bleeding's coming from.
right?
They put paper bags over my hands because most of the time with black men, they assume it was a shootout. So they were looking for gunpowder on my hands for shooting back. Um, and then they asked for a description. And I realized that I had to give them a description of myself, which was a black man between 4 feet and 7 feet wearing clothes. Um, Unfortunately, it was dark, so that was the description I had to give. Fast forward a few years, I moved to New York City. I was a top salesman at Macy's Herald Square, to the point where they brought me to their top section, which is the furniture and mattresses, which is where when they have all the celebrities and stuff come through, they come to the 9th floor with us because we usually aren't sticker shocked or shell shocked when we see celebrities. Um, and then I saw a commercial for Affleck, and it said, if you like to make money and help people, this is the industry for you. I got into this industry and I realized that I can make a difference in people's lives. Just like I almost lost my life, I know many other young black men who are in similar situations. And that's why life insurance is really important to me. Um, I call myself ADH Wealth Solutions because, yes, we do offer a plethora of wealth solutions. But the very important thing, and I'm speaking directly to, again, a lot of the African American community, because this is what I experience with my African American clients. Often they want money market accounts or investment accounts and things of that nature because it sounds great. In the year 2019, all the banks combined in the United States of America invested $3 billion into the stock market, which is why Black Americans are clamoring to go to the stock market, because they see that the wealthy put money in the stock market. However, in 2019, those same banks put $22.5 billion into cash value life insurance. What is it that the banks know about life insurance that your average American doesn't? And why would they put nearly $20 billion more into that industry? I'm sorry, you were saying something.
What is cash value life insurance?
So cash value life insurance is what they call most of the time whole life insurance. It's a policy with which you are going to pay a premium, and you are going to be promised in this aleatory contract a certain amount of money for a death benefit. However, that would be death insurance, and that's what most African American clients of mine think when they think of life insurance. Is all this is when I die, somebody gets a big check, and that's untrue. So when I die, somebody gets a big check is death insurance. With life insurance, there are things that you can use. So it's cash value because you're putting dollars into that policy, and the dollars that you're putting into that policy are actually growing cash value reserves that in the future you can use. You don't have to borrow. You can actually extract all that money and take it for yourself and use it for whatever purposes you decide.
So with cash value life insurance, whole life insurance, is it like a fixed monthly premium?
So that's actually a wonderful question. So the difficulty is most of the time you're not taught the difference in permanent. So there is permanent life insurance, which is cash value, but there's a multitude of types of permanent. Now, a regular whole life policy is going to be absolutely fixed in the premium that you're paying. For example, let's say a 33-year-old healthy non-tobacco using male spends $100 a month on a life insurance policy, a whole life insurance policy. Now, without full underwriting, I can't tell you exactly how much he'd be eligible for. So for this scenario, I'll say he's just buying a $100,000 life insurance policy, and he's paying $100 a month. With that being said, he will pay the, excuse me one second. Are you finished, Dante?
Huh?
Are you finished? I'm on stream.
I'm sorry.
No problem. When you have a regular whole life policy, you're paying that $100 for that $100,000. It is fixed. However, there is another product, which is a whole life policy or a cash value accumulation policy, which is called universal life insurance. And universal life will universal life insurance has a flexible premium. So for example, that same 33-year-old non-tobacco using healthy male will have paid $100 into that universal life insurance policy. But because the universal life is going to build cash value at a much faster and more robust pace than a regular whole life policy, you're going to have a less of a face value. So it may be, instead of a $100,000 face value policy, it will be a $75,000 face value policy. And then the premium is still fixed at that $100, but the benefit is it's flexible. So let's say 1 month you catch a windfall and you want to put $200 in. You can. Or in the event that, let's say you've had the policy for a few years and COVID breaks out and other bills are a little more, pressing on your mind. If you have cash value built up in that universal life insurance policy, that policy will pay for itself from the cash value that you have. So let's say you have $600 of cash value built up and your monthly premium is $100. You literally have 6 months of premium in that policy that will pay for itself.
So, all right, Alonzo. Um, I do have something. I had a question for you that I was going to wait to post, but this is good. I like what I'm hearing. Can you explain to me the benefits of if you have a child, you know, if you have a child getting life insurance for that child right now?
Okay. So the benefit of life insurance on a juvenile, this is actually one of the things that I enjoy the most, is actually creating generational wealth. So you were born in the 1980s, similar to me.
Yeah.
And one of the things that was popular in the 1980s for us was, give me 1 second.
What was it? The Gerber life insurance?
Well, the Gerber life insurance actually wasn't around then, but what was popular in our age demographics was a savings bond.
Mm.
Okay, and with savings bonds, for example, I was born in 1984, and my savings bond is not worth that $100 yet. Okay, however, the benefit to having a juvenile policy is this. When that child is born, you can have a life insurance policy on a child when they are 15 days old. They are their healthiest, and you pay for life insurance with your health. You actually don't pay for it with money. So they're their healthiest that they're ever going to be in that first 15 days. The cost of insurance is almost minuscule. So what you're looking for when you're getting it on a juvenile is, what does this pool of money go to? So the benefit is, I have a child who's 0 years old, and to get them a large policy may cost me $10 a month. If I overfund it, by the time they are teenage, they'll actually have money available. So I actually want to mention the Gerber plan, because a lot of times what happens is with the Gerber plan, and a lot of companies will offer you something called term to permanent, which is their juvenile life insurance.
Okay.
So specifically, and I don't like to down any company, because if you, the best thing to do is to at least have a policy in force when you need it. However, things like the Gerber Grow Up Plan give you what's called a term to permanent. So it will be a term policy, and it's not building cash value while that child is a juvenile. But then once they turn 18, they have the option to sign and get it increased from $10,000 to $100,000. Well, now they can also, at age of majority, take over the payments, but now it's a permanent policy, and now it's building cash value. The idea is, as a juvenile, to get a cash value policy from the time they're a child, so that the cash value is accumulating. So while it basically costs nothing to insure them, all that cash that you're putting in is actually building up. I tell people like this: your bank account grows at, your average bank account grows at 0.075% APR, which is an annual percentage rate. Your high yield bank account, which is a money market account, The highest yield interest rate bank account today, as of this conversation, is American Express, which is a 1.67% APR, annual percentage rate. Now, if you're familiar with credit cards, which most of Americans are, you're familiar with compound interest, which just grows on top of each other. With credit cards, it's daily. With life insurance, your compound interest is monthly, and it's usually on the low end 2%. So what I ask you is this: we'll go to the bank and we'll put money in Chase Bank and wait a year to earn $1.67 off of $100. Whereas we could put that same $100 in a life insurance policy and wait 30 days to earn $2 off of that $100. Which would you rather have? $2 a month or $1.67 a year?
I'll take that $2 a month.
So why don't more of us have life insurance?
I think everybody would rather take that $2.
Mm-hmm. So does that partially answer your question? I want to make sure I 100% answer your question.
No, you answered my question. My brother, have somebody on like you to actually educate, which, a lot of us do, especially, African Americans, we need education. The fact of the matter is we need somebody to actually sit down and talk to, but it's hard to find actual good-hearted people that will take the time out of their day to explain this.
Understood. Well, the other issue that I've learned is often when choosing a financial professional, many financial professionals don't know a lot of this stuff in the industry, if that makes sense. So a lot of them, I'll give you an example. I had a sales meeting with my team a couple weeks back, and one of my senior producers, who's been in this industry about 25 years, explained, because when I generally write a life insurance policy, I like to make instant millionaires. So I speak to people about their net worth, and people don't understand how to calculate net worth. So I'm going to teach this calculation. I understand but a lot of your followers may not know. So I want to teach a quick calculation of how you determine one's net worth. Okay. And to determine net worth is to take one's assets, okay, versus their liabilities. Now, let's look at what an asset and a liability is, because people get confused on this often. An asset is this $200,000 house. The liability is the $250,000 mortgage that I have on this $200,000 house. So right now, if you only look at the asset and liability of my house, my net worth is negative $50,000. Why? Because the value of the house cancels out the value of $200,000 of that loan, but there's still $50,000 more on that loan. So that makes me worth negative $50,000. Now, when I turn around and I put my $750,000 life insurance policy there, well, that makes me worth $700,000. Again, there's more things to it than that. Obviously, we're looking at cash in the bank, other assets, and liabilities. But I just want to give a quick macro overview of what it looks like. Okay. So what I tend to do is, especially in the African American community, I like to make brothers millionaires overnight, right? Because it feels good to say, sorry?
Please explain that. I would love to be a millionaire overnight.
Okay. Because just because you have $1 million, right, that does not make you worth $1 million. And that's where people get confused. If I have $1 million cash, I'm not worth $1 million. right? Now, if I have assets and $1 million cash, if I have $1 million house and a 0 mortgage, I'm worth $1 million.
Okay.
Because that cash is not anything but cash. That can go in the blink of an eye. I buy a Bugatti, that $1 million is gone. Then I have a liability of $1 million car that's not going to make me any money. I buy $1 million house, that $1 million is gone. But I have the equity and the value of that house, that asset. I can rent it out or I can live there. So to turn a person into a millionaire overnight is the simplest thing of finding out, listen, how much debt you have. You're $75,000 in debt. Let's get a $1,075,000 life insurance policy. Once that policy is issued, that $75,000 of debt that you have is erased from your net worth because you have something that actually will be liquid assets that can cover that $75,000 worth of debt. Then you get that $1 million life insurance policy and you're worth $1 million. You know? So that's kind of one of the ways that we use to go ahead and actually increase our net worth. It actually works.
Shit, damn. You think I need to turn in my Bugatti?
You should turn in your Bugatti, sir. Yes.
Whew. If only I had a Bugatti.
That's not a problem. But yes, so that's really what I like to do is make you an instant millionaire. So my original sales manager, he initially didn't understand. He was writing a lot of life insurance, but he was writing policies that really did a detriment. What he was doing was what a lot of people, especially in the African American community, do, which is buy death insurance. So we buy a policy that is a small face amount, just enough to cover my funeral. I don't want to leave nobody nothing, which is terrible, right? I look at multiple ways that we can use this product or this service to help us close that financial wealth gap. And one of those things is life insurance. And you don't have to die to use life insurance. I'll give you another tip. One thing that I do with a lot of my older clients, I have a next door neighbor who she recently retired from Merrill Lynch. And we talk all the time about, financial services. She's an older Caucasian lady. And one of the products that I tend to offer to people in the African American community is an annuity, because insurance companies got rid of what was called a pension, aka payment till death. Now, everyone in America is clamoring to get a payment till death, to pay a payment till death, meaning their mortgage. If you look at the textbook definition of the term mortgage, payment till death. So the other way around that is an annuity, which is a payment from the insurance company to you, the insured, until the day you die. This woman said her only regret, and she spent over 40 years in the financial services industry, her only regret was not buying more annuities. And then again, I wanted to tell you, because a lot of financial professionals don't know a lot of how this works. The annuity being a payment till death, she didn't buy more of them. But then I explained to her, well, do you have a life insurance policy, a cash value life policy? She said, well, yes, I do, but I don't have any kids, but I need the life insurance, in case I die. I said, you do. But at this point, if you're not looking to leave a legacy, now is the time where you get a final expense policy. And you take that regular cash value whole life policy and you use it as your retirement account. You roll that over into an immediate annuity, and it will start paying you X amount of dollars every month until the day you die.
Well, ladies and gentlemen, thank you for tuning in to the Chronicles with me, your boy Chronicle Matt, and I'd like to thank my special guest, Alonzo Hall, ADH Wealth Solutions, for stopping by and dropping some jewels on us. Alonzo, I would definitely love to have you back on here again. Uh, can you let the people know where to find you?
Sure thing. So if you're looking for me on YouTube, it's simply my full name, Alonzo Hall. If you would like to find me on Instagram, it's ADH Wealth Solutions. You can find me on Facebook.com/AdHallCo. That's ADHALLCO. Or you can find me on Facebook through my personal name, Alonzo Hall, as well as Patreon, ADH Wealth Solutions.
All right. So my brother. Like I said, it's always great to have you on. We have to do this again. We gotta get some drinks sometimes, man. Like, thank
I'd
you.
love to.